Good morning, everybody. It is Tuesday, the 11th of February, 2025. Tuesday is my new regular slot for putting out my videos. That's because I want to see how the market opens and settles on Monday. I think we've got a better formula for success by using Tuesday. So let's get cracking. And as usual, we'll have a look at the market, we'll have a look at my stock picks, and then the clubs. And in the clubs this week, I'm going to be looking at the new statement that I'm putting out, a trading statement for each of the clubs. There's some development work probably to do on it, but it's looking pretty good. So first, the market. And you'll see I've got two charts here. One is the one that I showed last week. That's from the 3rd of February. And then I've got the close of business last night. So at the end of last week, or rather as we were going to film last week, the market had a down. That's just regular news items coming in, Trump-based. But since then, things have picked up again, and we're moving. Now, I think personally that the market seems to be coalescing around the 6,000 mark on the S&P. However, I'm not getting too carried away with the S&P 500 because 40% of its value is now from 12 companies. I'm actually beginning to think that I need to look around for another yardstick to measure things against. And next, my picks. As usual, they're based primarily on charts and indicators. That's the first filter, but then I want to see better investing, good results, Zach's good results, value line comments that are positive. I need to get decent premiums and also not use too much stock buying power. And if I can get it, I prefer end of the month or beginning of the month expiration dates. And I'd like to get some clearance as much as possible between the strike price that I'm using and the current price. Obviously, I want my strike prices to be below the current price. And here they are. It's a bit tricky this week. There's some good stuff out there. Dell and Devon Energy are particularly good. I like those. And they give annual rates of return on investment of 85 and 79%. They're very good. The slight issue is the earnings announcement dates are due in the very near future. So I'm going to have to be very sure that I'm doing the right thing if I go into Dell or DVN. But, we'll see how we go. I have a couple of others lower down the scale. I've got APH and NVO. They've got later earnings announcement dates, but they've also got lower annual return rates. So we're going to have to make some choices on life here. Okay, the clubs. So let me just share with you the latest iteration of the new trading statement that I now have available for all of the clubs. And if you go to myinvestmentclub.co.uk, go to the members hubs, then to your club, you'll see that it's now a tab on the normal spreadsheet. So the normal spreadsheet shows all the trades we're currently engaged in. And what I'm going to show you now is the new tab entitled Trading Statement. Okay, so the club that I'm using for my example this week is the Extra Income Club. As its name suggests, this is an income and capital growth club, and they're doing pretty well. They've paid out once, and they're about to pay out now in February for their second payment. And it's been running for 16 months. These clubs don't pay anything out for the first 12 months, so it's paid out twice in 4 months, so it's doing okay. But it's very different. So I'm now entitling something called real value. So the real value is what the shares are worth and the amount of cash in the business. The brokers then adjust that through option drag, and that brings it down to a value that is a walk away value now. However, I really don't think it's appropriate to ignore the value of the shares that we own or the actual cash we have in the account. And I know anyway that the option drag will come to fruition, will come to the club as we go forward. And this is also a point in time view of things. So I should say that anything with a blue background is very much a point of time. They are appropriate to the date that's given at the top. And the brown stuff, well, it's either titles or it is, something that's just doesn't change. The gray areas, they are current. So the number of shares held, the prices paid, the current prices, they are 15 minutes delayed. So on there, we can see that unlike the dashboard that we have been using, which will continue to be available, we get the income. So we look at AEO. This club's got 1,000 shares and it's paid an average of $18.57. The current price is just under $15 at $14.95. And we have a target. That's if we plan to come out. And the target is developed by looking at the charts and getting the next solid point of resistance. In this case, it's $22. I've got the total cost of the shares. That's just the number of shares multiplied by the price. And then we've got the income per share, 56 cents in this case. So the exposure is the cost of the shares less the income. So in this case, $18.01. So indeed, we are $3.06 underwater on this particular share. The value is 14,950. And this is also new. You can see that this represents 8.8% of the value of the shares that we actually own. And we are at a situation where we have got an overall loss in the value of those shares of 7,000, even though we've got $37,000 worth of income on them. And you can also now see the industries that they are formally associated with. Now, I'm not too worried about that 7,000. Several of the stocks we have got are actually in profit, but if we go to the top, we can see the real value of 385,000 compared to the total investment of, call it 311,000, isn't bad. In addition, the club has already paid out 20,000. So if we add that in, the value that the members have got is the real value plus the money that they've had paid out, 20,000, 405,000. That gives us a real-time gain of 94,000, 30% in 16 months, having taken some money. And also, if we divide that by the number of months have elapsed, 16, we're doing just under 2% per month. I think we can do better. I'm not giving up on the thought of 10% per month, but that's just where the market happened to be when the figures for this were done. Scrolling down a little bit here, I've got projections. So I'm not using the value line projections anymore. I'm satisfied that the projections from value line, the forecasts from value line, just haven't been very good over past years. Now, that's not everyone's view. I know that some people do stand by those forecasts, but I don't. So I'm doing straight line projections. Now, also, you'll see I've got two projections in here. So in the first one, I've got straight line projection of real gains from the first trade to the end of month 60. So that's right from the beginning of day one, up to the 5-year time horizon. And we're looking at 235% on that, and an account value with no new money going in of 1.1 million. I've then looked at a further projection, which is to take it up to another 5 years. I'm trying to tempt you into staying, and that takes us up to 470%. However, back on the 1st of July, we changed the way we trade quite substantially. We stopped selling puts that were well above the current price and only sold puts that were at or below the current price. That has made a huge difference to our performance. And taking that into account, so using up to July's actuals and then projecting based on the performance from the 1st of July up to the most recent date, then we see that we've got a significantly higher, almost double performance in that time. So I think it was a good idea to move the trading system as we did. Come the conference in March, I will be going through in absolute detail how we have moved from this projection to this projection by changing the performance of the clubs. I've also got further down all of the current unexpired puts. We've got what they're in. We've got the time to expiry, the number of days left, and that's lifetime too. Number of shares involved, the strike price is the current share price, what we've committed to spend, the premiums we've got. Now we've got our potential income, in this case $333,677, and the current income, which is telling us that we're not currently, when this was done, due to have any of that stock put to us. We will walk away with all of that income. However, the option drag that the brokers place upon us is 36,809, even though it would only actually cost us $18,750 to close all of those puts. That's another reason why I think that using the real value is more appropriate. We also have a couple of calls, and they're detailed in here. You can see where they're standing. So we've got, again, our potential income, 17,260, and our current income, 17,260. Also, we're not due to have anything taken away from us. And then below, I've got a summary, which I've just updated. That's showing the total invested, the real value, the 60-month projection, and the 120-month projection. So, we're looking very healthy. We always want to see this step going up on each of those, and that's where we're at present. Okay, and once more, the conference, it's really looking fantastic now. There's so much new stuff and so much potential in this. There's actually, I've got a position where if you want to trade to cover the cost of it, I can help you do that. If you want to use some of the money in your club trading account, I can help you to do that if you want to pay for it that way. But basically, if you can get there, get there. And if you joined my Facebook group already, thank you very much. If you haven't, then please do. And finally, if you're watching this and you're not already a member of one of these investment clubs, then you should consider it. Get in touch with me. I can put you in the WhatsApp group. You can speak to members, any or all of them. And there are 350 or so of them. And I can go through what we do and how we do it on a Zoom call, if that's what you wish. Thanks for listening. Have a good week.